Hi and welcome to Monday Market Outlook. Let's see what this week has in store for both the Philippine Stock Exchange as well as the US markets. Both markets are reaching some resistance points, no? So let's see how we can trade this information for the coming week and how we can plan our trades also as early as for next year, no? So here, let's look at the Philippine Stock Exchange chart. As you can see, we are still well into a bear market rally, no. But at the end of the day, it's still a bear market, no, because if you can, if you see here, trend line is still going down, right? Trend line is still going down, and the bear market rally is almost there at the resistance point, no. So if we look at this bear market rally channel here, it is also reaching some resistance here at this point, no. And usually based on what has happened previously, there's a chance that this might correct to this trend line here, right? Now, if we draw a couple of horizontal lines here, we have what looks like a resistance level here, right? As well as somewhere down here, this range, no, which also coincides with where we are right now at around 6,437. If we trace a Fibonacci area here, look, we are also hitting some resistance here at 0.61 area, right? So there's a high probability that the market will correct soon, no? If not this week, maybe next week. But we are hitting some resistances, no, at the 6,400 level, no. But the good news here, if you look at the net foreign buying for the past 3 weeks, it has been increasing. Look, no, November 4, 600 million, 1.8 billion, and 2.9 billion. And the winners in the net foreign buying in the 3 weeks of net foreign buying, totaling 5.4 million. These are the winners. You have your BDO, you have your banks. As we said, high interest rate environments, the banks will benefit from increasing interest margins, no. We have BDO, Metrobank, as well as BPI, you know, the beneficiaries of these foreign inflows. The reopening story is still intact. You have your Ayala Land, you have your SMPH and SM, and you also have your reopening consumer stocks, no. You have Jollibee, you have Pure Gold, you have URC getting a large portion of that foreign inflow. So the question is the question here, would the net foreign buying continue for this week that can help the PSEI overcome these resistances, or will the PSEI succumb to these resistance points and correct, no? As traders, we have to manage risk, right? Given that there is a higher probability of correcting, right? And the market should correct soon, because the market needs to digest this uptrend, no? It's been going up for how many weeks already? For around 6 weeks, and the market needs to correct a bit for it to be able to sustain its rally, no, and make another attempt at breaking this trend line here, no. So let's see for this week. If I would suggest, you know, if you can lighten, if you can sell on strength on some of your issues, top slice some of the issues that may show some resistances this week, you know, and then just get back in when when the market pulls back in 1 or 2 or 3 weeks, right? So uh, why are investors, why are foreign investors flocking to the Philippines, no? And looking at a couple of data here, right? Let's look at the bond. Recently, the BSP has raised rates by 75 basis points. So if you look at our the reference rate, the BSP rate right now is at 5%, up from 4.25. No? Now we are looking at the Philippines yield curve. Now this is the price of government bonds covering 1 month, 3 months, 6 months, a year, 2 years, 3 years, etc. Now this is what is called a yield curve, no? And the yield curve is basically measures the yield, no? Basically measures the outlook, investors' perception of the outlook of a country in the coming years. Now, if you look at the Philippines yield curve, it's a normal yield curve, and you notice that 6 months ago that yield curve wasn't going up. It's actually partially inverted, right? So what this means is that investors have a are investors feel that the economic outlook for the Philippines is becoming better, right? So the 2 years, 3 years, and so on and so forth, the yield, no, the interest rates, the yield is going up. So from 6 months to 1 month ago to the current yield curve as of November 18, it has become steeper, right? So this means that the economic outlook has improved, no, vis-a-vis 6 months ago. So this reinforces our story of reopening, no, and which could be why investors are now coming in as early as now. But if we differentiate it from the US yield curve, right? Look at the US yield curve. This is what is called an inverted yield curve. Now, an inverted yield curve is actually a rare occurrence, and it's usually an indicator. It usually suggests that there will be an economic slowdown in the next 1 to 2 years, right? Which is, you've heard it in the news, no, inverted yield curve. We're looking at a recession next year for the US. Look at the 1-year yield. It's at 4.7%. But the 10-year yield is at 3.7. Why is a longer year yield lower than the short-term yield, no? So this is an inverted yield curve, which usually suggests that a recession is coming. As we've mentioned before, if you look at this chart, these are the sectors, these are defensive sectors that you want to look at coming into the next year for the US markets, right? You want to look at healthcare, you want to look at consumer staples, utilities, right? So these are your go-to stocks during a recession, no? Especially in the global markets. So some recommended stocks in the healthcare sector. Take a look at Cigna Corporation, right? So earnings beat. This is a great stock that you can consider. PE ratio is around 15, not too bad. Return on equity and return on investment numbers are great at around 36%, I think. You can also look at Merck, right? Also a great stock, fairly priced. Look into these stocks and see if you can buy at around this level, right? See if you can buy at around 95 if it pulls back. or 97 or 95, right? Okay, now moving on to the S&P 500 and the US markets. Here's the S&P 500 chart. As you can see, we are still in a downtrend channel, and we are close to hitting the resistance point here at around 4,057. As predicted, when the S&P 500 hit its support level here, it slowly went up to this trend line, which I have been plotting since October 4. So in a week or two, it might hit 4,000 and then make its way back. Most likely, it will make its way back here. Either let's plot some horizontal lines here and see. So we have a support line here. We can have a support line here as well, right? So will it move past this support line and form a lower low or form a double bottom? We don't know, right? But for this week, you have a little bit of space here, and monitor if it's gonna break this, if it's gonna break out or not. Most likely, but there's no reason. Look, it has hit resistance once, twice, thrice. There's no reason to believe it's gonna break out this time. Right? So when it hits there, you can start selling on strength, or as of now, start selling on strength on some of your stocks, and then or you can start entering short positions on some of the stocks that are hitting resistance levels, right? So that's it for our market outlook this week. If you like the content on this channel, don't forget to subscribe to the channel so that you can get notified. Thank you for watching, and I'll see you again next week. Bye-bye.